Journal entries. In order to understand how a journal entry works, we must know the most fundamental accounting equation. Assets equals liabilities plus equity. An asset is an economic resource that is objectively measurable, that results from a prior transaction and that will provide future economic benefit. For example, cash. When assets increase, you debit. When assets decrease, you credit. A liability is an obligation of a business that results from a past transaction and will require the sacrifice of economic resources at some future date. For example, accounts payable. When both liabilities and equity decreases, you debit. When both liability and equity increases, you credit. Equity is the difference between a company's assets and liabilities. It represents the share of an asset that is claimed by the business. For example, contributed capital. The balance sheet shows us the assets, liabilities, and equity in which we must debit or credit. Journal entries are used to record every transaction made by a company that affects the value of their assets, liabilities, and/or equity. For example, when a firm pays for office supplies, you debit supplies as an asset and credit the cash you used to buy the supplies. Every entry has two sides, the debit entry and the credit entry, and it must increase or decrease by the same amount. For the transaction to be balanced in the books, the total credits must equal the total debits. Now we have an exam-style question. So step 1. You have to analyze whether there's been an increase in assets or an increase in liabilities or equity in order to decide whether to debit or credit the accounts. Looking back, we remember to debit assets when they increase and credit equity when it increases. So therefore, you debit cash and you credit equity. You must remember to indent the credit line and write the description of what this transaction is at the bottom. I hope this has helped. Thank you.